In this video, let's calculate personal income tax using a nested if formula in Excel, based on the Sri Lankan tax slabs under the new Act. The tax rates are as follows: 0% for the first 1.8 million rupees, 6% on the next 1 million, 18% on the next 500,000, 24% on the next 500,000, 30% on the next 500,000, and 36% on any balance income. In previous video, I have explained you how to use if functions separately show different tax slabs to obtain monthly tax liability like this. Now let's build the nested IF formula step by step. Assume your monthly taxable income is in cell C4. Start with this. If C5, 1800,000, 0. If income is less than or equal to 150,000, tax is 0. Next level, IF C5 less than or equal to 28 million, C5 minus 1,800,000, into 6%. This means if income is less than or equal to 1,150,000, apply 6% on the excess above 150. Now we continue with the next slab. If C5 less than or equal to 33,060,000 plus C5 minus 2,800,000 into 18%. Here, 60,000 is the fixed tax on the previous slab, plus 18% on the excess above 1,150,000. Next, IFC5 less than or equal to 38,100,000 plus C5 minus 33 million into 24%. This adds a fixed 150,000 plus 24% on the next slab. Then, if C5 less than or equal to 43,200,000, 200,000 plus C5 minus 3,800,000 into 30%. Now we add 270,000 and apply 30%. And finally, 420,000 plus the difference between 540,000 and 4,300,000 into 36% for anything above 2,650,000. We apply 36% on the balance. Put all these together to create the full nested IF formula. This lets Excel automatically calculate the correct tax based on any income value you enter. Want a downloadable Excel sheet with this formula ready to go? Let us know in the comments. And don't forget to like, subscribe to How to Do, and click the bell for more Excel power tips.